Thank you for joining us on this edition of KTN Business Weekly. Tonight, we look at the Unclaimed Financial Assets Bill. What should be done with money that's left lying in commercial banks, brokerage houses, pension funds, and so on when the owners die or do not inform the next of kin of the fact that such funds exist? And what does the bill propose? We also visit a farmer in Kajiado who has converted what many consider or would consider unproductive land into a gold mine of sorts. The Investor's Diary and lots of other information on matters affecting the economy and your pocket. Remember that you can send in your questions, observations or comments to the SMS number 8040 or the email address ktnbizweekly@standardmedia.co.ke. Good evening and welcome to this edition of KTN Business Weekly. I'm Michael Oyer. It is estimated that financial institutions, including commercial banks, insurance companies, pension funds, and so on, are holding in excess of 30 billion shillings in unclaimed assets. Their owners, having died, left the country or been frustrated to giving up the amounts with the various institutions. But unscrupulous staff at the financial institutions have been known to exploit such loopholes and enrich themselves, at the expense of ignorant next of kin or the economy that should hold such amounts until their rightful owner is identified or put them to noble ventures. But our feature looks at what Lysamis legislator Joshua Lekuton proposes in the Unclaimed Assets Bill that's now passed the second reading in Parliament.
President Mwai Kibaki was among those who went to condole with mourners at Kamwedei village in Kagundo during the burial of several score people who lost their lives in a grisly road accident about a week ago. And while matters road safety and responsibility were discussed, there was no mention of the deceased's property here.
Sisi ambao tunasimamia kazi hii lazima tushike wale wanaoharibu kazi hii na kufunga. Hakuna njia ingine.
Shift gears and head over to Japan, where about 3 months after the worst tsunami in Japanese history hit the country's shores, police have managed to return about 5 billion yen found in safes and wallets within the wreckage of houses destroyed in the deluge to rightful owners and kin. The difference, a legal framework that defines what to do with unclaimed financial assets. It is not uncommon in Kenya to rob the dead, not just at accident scenes but also in banks and other institutions where they may have had their assets stashed. But according to the International Institute for Legislative Affairs, this need not be the case. Vincent Kimosop is Executive Director at the Institute. His organization has been working on an unclaimed financial assets bill for the last 3 years.
The bill seeks to set a framework that the country can use in the management or the governance of unclaimed financial assets. And unclaimed financial assets are basically an accumulation of resources. And this could be, you can actually look at issues like stocks, caution money, traveler's checks, money orders, and also balances that we have by many Kenyans within the financial institution. If you invest money in a bank or if you open an account and you migrate out of the country within a period of time that you don't have a user-generated activity of your resource, that ought to be earmarked or identified as unclaimed financial assets.
Part of the reason that people get disunited or separated from their assets, records getting lost or people forgetting, or sometimes even mishaps such as death, and of course people dying intestate, and among many other reasons.
He points out that you don't have to be dead to have unclaimed financial assets. It is a debate that is as emotive as it is convoluted. Many people will relate with the fact that they may have left their caution money in school, abandoned deposits for utilities like electricity and water, just because the hassle in collecting the cash was not commensurate with the amounts involved, or just plainly ignored that embarrassingly little amount on that dividend check.
It finds my support in particular because it intends specifically to unite people with their assets. It is not a transfer of somebody's private property to a third party, which is in this case government. So it's really not an expropriation as much. It is just a question of putting these assets in a neutral place where then the owners could be searched for, and where possible they can be found and reunited with their assets.
Joe Njagi has been part of the efforts to get the country's first ever unclaimed financial assets register up and running for many years now. The register is a place where all the information on unclaimed financial assets is pulled into a database that provides a one-stop shop for those searching for information to do with unclaimed financial assets.
A lot of assets actually find their way into the public domain, unclaimed assets that is. You find that certain insurance companies put out the notices. You find that a lot of people write obituaries. They come onto the newspapers. You find the Deposit Protection Fund, they give a lot of information. So a lot of information is in the public domain.
And while this information has been out there, it has not been of much use or even made much sense because it is rather scattered and cumbersome to handle.
It is not collated into one single source, and it appears once and then never appears again. Now our core business is to assemble that information. So we have it going as far back as we have wanted to, which is the beginning of independence.
This is where the Unclaimed Financial Assets Bill of the year 2011 comes in. It seeks to give legal framework to the process and thus make it more efficient and even legally binding.
We as a country do not have a framework to manage unclaimed financial assets, yet international best practice requires that the institution establishes an agency. It defines different periods because assets differ and every financial instrument has its own period within which it matures.
An unclaimed financial assets law or bill, together with a regulatory institution, is in principle, and especially in a country like ours where payment systems are not very good and they're fragmented, assets held over here and there, is in itself a very good idea. Now, many people may not agree on the details, but it's a good idea.
And of course, like any other new revolutionary idea, there is resistance. Experts put this down to fear and lack of understanding.
We have had actual resistance. I would confirm to you that the debate on unclaimed financial assets started in 2009. And even before 2009, government came and established a task force. So from the time 2009 when the task force finished its recommendations to 2011, whereby now we're seeing a private member moving a motion in parliament or a legislation of the same, it tells you there was some resistance.
Indeed, never before has the need for such a law been more apparent. Currently, it is no one's responsibility to trace owners of such unclaimed assets. A memory still fresh in many people's minds is the debacle surrounding refunds to the Safaricom initial public offer, which to date is still unraveling.
After the Safaricom IPO, we had an oversubscribed IPO, and within 3 months, the amount of money that was reported as unclaimed, in the sense that Safaricom could not be able to trace its rightful owners, was over 90 million. This is a 3 months activity that translates to 90 million. And remember, we are in a country whereby everybody at least has a mobile phone. Yet, we still have a problem of unclaimed financial assets. One of the challenges we have is that information capture. The amount of information that our financial institutions capture when you are registering, when you are opening an account, many of us do not give full information. And a lack of contact is one of the major sources of unclaimed financial assets.
Then there is the advent of new ways of transacting cash like mobile money such as M-Pesa, UCash, Orange Money and Airtel Money. Many people either die, forget, move and leave the virtual money still in their accounts. This remains unclaimed to date.
The idea being that because people are not able to trace, whether it's because of forgetfulness or any other mishap, it is a good thing for government or an institution, an neutral institution, to actually come up and try to unite people with their assets.
The catch, however, is that in the past there was recognition of the need to have a sort of framework to carry out some aspects of what the bill proposes to do. Hence the setting up of the Office of the Public Trustee in the country in the year 1925.
I must state very, very clearly that the Office of the Public Trustee has performed very poorly. I mean, I think there's nobody who's handled the Office of the Public Trustee who's very, very happy with the competence of that office. One, it is a non-transparent office. Two, the leakage of funds. And in my view, they are incapable of performing the role that we'd like the third party to perform.
And with Kenya as a country mired in a history of financial impropriety and financial misgovernance, funds which remain unclaimed have provided a playing field for the unscrupulous, even opening up financial institutions to the risk of litigation for mishandling of funds.
Or provides a new buffer to institutions to actually extricate themselves from those risks after some time. Because those risks are real, and there are cases in which actually they've destabilized institutions.
And amongst the organizations that hold these assets, you find that there are operational risks. This is where you find that the concentration of frauds are. It is the area that there's no legislation how to deal with it. So I think there will be some resistance in the initial part of the implementation.
So just how much money are we talking about? Despite the fact that the report done by the task force set to look into the issue in 2009 did put out a figure, stakeholders confirmed that the sums involved are vast, though they are never consistent and a really certain amount cannot be put to them.
Unclaimed assets are a process. They will never end. They will never end because there is legislation. People will always forget. People will always think that an asset is too small for them to bother with. They are not bothered with their caution money. But it is the horizontal summation.
The banking sector, if I can quote the report of the task force, had 9 billion within them. And this is just a snapshot figure, yet declaration and reporting was not up to the standard that was expected.
Across the world, there are precedents on just how to deal with such funds. The first step, however, is a legal definition of various timelines and the funds themselves that then sets the stage for what will be done next.
Countries like the United States, United Kingdom, Malaysia, Canada, and even Australia, they have frameworks on how to manage and claim financial assets. We do not have a framework, and this has been one of the major weaknesses within our financial system, and one area that the country requires reform.
In Kenya, for instance, I think one of the very good places they could be used is to create a revolving fund for higher education loan board. So everybody is able to benefit from that scheme. They could be diverted, as has been suggested, to cover the shortfall in HIV and AIDS. They could be used for infrastructure.
And with the bill already having sailed through the second reading in Parliament, intense debate is sure to emerge as to just what will happen to the 30 or so billion shillings currently estimated to fall within this realm. And with a dialogue going on, the interest generated should see the bill become law to the betterment of many Kenyans who have unclaimed assets in many different places with no means to either collect them or even know where they are.
It will help in confidence building, because you know that even if you're not aware, if you're not around, or if you die intestate 10, 20 years down the line, you can come back for your resource and you will get. Then secondly, it will also help in helping government access a non-tax revenue.
Even besides the fact that these funds may be useful for social purposes, the bottom line remains that if they lie in holding institutions, they will continue to get eroded and lose value just lying there, while in a central fund and properly managed by trustees, could continue to grow and generate interest and maybe even earn a return that acts as a buffer against attrition brought on by vagaries such as devaluation and even inflation.
Time now for a break, but when we return, we visit the lush farm of Kirtesh Shah, or Olengishu, as he is known in Kajiado, and learn what a little innovation can do to land that lies underutilized in many parts of the country. But that is on the other side of this brief break. Stay with KTN Business Weekly.
This is a picture that Kajiado North presents. A very dry, lonely, rocky topography that is considered unproductive. Area residents do not make the situation any better. Keeping a large herd of cattle and sheep has been the way of life for years, despite the reducing grazing fields and climate change that has led to unfavorable rain patterns.
Ile biashara watu hapa wanajua ni pengine ni ufugaji. Na kwa sababu ya hiyo mambo ya maji inaleta shida pia, kwa maana watu hapa bado wanafuata ile ng'ombe ya zamani.
The ongoing drought has seen many area residents sell off most of their animals for fear that they could succumb to starvation. However, all is not lost. There is something special to learn from Kartesh Shah, an entrepreneur who has resided in Kajiado North for over 20 years and is known to many as Olengishu, which means son of cows. With the topography of the area consisting of valleys which can easily harness water during the rains, Olengishu Shah has built a 3 million cubic meter dam.
When we came to this farm, there was nothing. It was all rocky area. So it took us about 10 to 12 years to start working on it. The secret for that was that we thought, now why don't we look into putting up a dam? So we came with an idea with a small dam, and then we expanded gradually.
A further installation of a water pump at the dam, excavation and irrigation of the land, which commenced 4 years ago, has made it possible to transform the farm from a bare terrain that once looked like this into this productive farm.
Most of the water which we are using is for irrigation, mostly to grow a lot of fodder crops for our dairy cows, and about 30% of it we grow vegetables to supply in the market in Ongata, Rongai and in Karen.
The diesel water pump and proper piping has seen him irrigate more than 20 acres where he has planted an assortment of crops for the mass market as well as for his dairy cows.
I'm trying to preach that why don't we put up these small dams, because the water is when it is running, we are not harvesting water. The main aim is to harvest water.
On the other side of his farm lies a structure that houses more than 100 dairy cattle, which he has managed to keep thanks to his water dam.
At the moment I got about 60 big cows and about 30 heifers, and the young ones I got about 30 of them. A total of about 120 cows.
With an automated milking and cooling plant, he is able to obtain an average of 500 liters of milk daily, which he sells directly to Kajiado and as far as Ongata Rongai. His secret of getting maximum returns has been to avoid middlemen.
The idea of taking directly to the consumers is a better market for them, because I avoid other costs like what we call packaging. I don't want to have any middlemen. So I thought direct marketing would be better. The money which we get at for the milk at the moment will sustain the farm. Average of about 650,000 a month. But if we go to cooperatives and other places or big processors, we hardly get the prices what we want.
He is seeking to embrace the latest breeding technology in predetermined sex, artificial insemination and embryo transplant to double milk production capacity of his dairy cows.
We are aiming to get cows which are producing, at the moment we are getting an average of 20 liters, but we want to aim to go up to 40 liters per cow per day.
His neighbors have commenced emulating him, and in less than a year, their efforts are bearing fruits. Their farms are flourishing due to irrigation, and some are already rearing pigs at a commercial level. However, area residents argue that if provided with electricity and road infrastructure, they could be more productive.
Challenges which we are facing is the roads and the power. After we get those two in place, we are thinking of putting up a small Olengishu dairy cooperative for farmers within. We can get farmers as far from Sholinge and Makoko and Olesrigon. And then we process the milk and sell it everything to Ongata Rongai.
If one had any doubt on the impact of water harnessing and irrigation to providing practical solutions to food insecurity, then entrepreneurs in Kajiado North present a perfect example of what could transform Kenya if emulated across all regions of the country.
In the market report, the Kenya National Bureau of Statistics reports that inflation for the month of August rose to 16.67% from 15.53% in July, meaning that the cost of living has consistently increased for the last 10 months and more people are threatened with falling into poverty. Interest rates have also been on the upward move as government paper yields higher returns and making it more expensive for you to borrow from financial institutions. The rate on the 91-day Treasury bill is pegged at 9.70%, while the rate on the 182 and 364-day papers is pegged at 10.35 and 11.06% respectively. The average bank lending rate as at the end of June stood at a higher 13.91%, while the average bank savings rate stood at 1.37% as at the end of June, meaning the banks were enjoying a spread of 12.54%. At the Nairobi Stock Exchange, there are 11 stocks currently trading with dividends with yields ranging from 0.62% at Jubilee Holdings to 6.55% at Safaricom. Other stocks that will give you a dividend if you bought before books close on the shown dates are Housing Finance, EGADS, East African Cables, Kenya Airways, Barclays, NIC Bank, Bamburi, Mumias and East African Breweries. Well, that's all we had time for this Wednesday. Let's do it again next week. Remember that you can send in your comments or questions to the email address ktnbizweekly@standardmedia.co.ke or send a text message to 8040. From myself and the entire team at KTN Business Weekly, thank you very much for watching. I'm Michael Oyer. Good night.